All right, good afternoon, everyone. Thank you for joining us. My name is Tyler Scribner, and I'm a policy analyst for the National Congress of American Indians. I'll be your moderator for this webinar series. James Colomb, project manager for the Center for Indian Country Development and co-moderator, is unable to join us this afternoon, but has been an integral part of this webinar series. Thank you very much, James. On behalf of NCAI and CICD, we'd like to thank you for attending the third installment of our four-part series on homeownership in Indian country. This four-part webinar series covers the Tribal Leaders Handbook on Homeownership, a publication of the Center for Indian Country Development of the Federal Reserve Bank of Minneapolis and Enterprise Community Partners. Today we'll hear from Tawney Brunsch, Executive Director of Lakota Funds, followed by Juel, Branch Manager of First Tribal Lending. After Tawney and Juel, I'll discuss some transferable lessons and open up the webinar for Q&A. Lastly, we'll provide you with a few brief announcements of upcoming webinar dates and closing remarks. Before we begin the presentation, I'd like to go over some of our webinar features. First, you should see on your screen the PowerPoint for today's presentation. If during the presentation you experience any lag in slide transition, it may be a result of internet connections, so just give it a few extra seconds to update on your screen. Currently, with the exception of the panelists, all audience phone lines are muted until conclusion of the presentation. But if you'd like to queue up a question at any time during the presentation, you can type it into the questions box on your webinar control panel. After the presentation, we'll have a Q&A session, and panelists will answer questions submitted through the questions box. If you'd like to ask your question over the phone, please use the raise hand option so we can unmute your phone line after the presentation and during the Q&A session. Our webinar software archives all questions submitted through the questions box, so if we're unable to answer or address your question for any reason, we'll follow up with you after the webinar has concluded. And finally, this webinar is being recorded so that we can share this presentation with you and others not available to attend today. Now that we've covered some of the webinar features, I always find it a bit more personable to see who's behind the phone. As previously mentioned, your webinar series moderators are James and myself. I'm a policy analyst for the National Congress of American Indians and a proud citizen of the Chickasaw Nation. James is a project manager for the Center for Indian Country Development of the Federal Reserve Bank of Minneapolis. NCAI is grateful to partner with CICD to produce this four-part webinar series and appreciates the critical role James has played in organization and production of this series. Our presenters for today's webinar are Tawney Brunsch and Juel Burnette. Tawney is the Executive Director of the Lakota Funds, the first ever Native Community Development financial institution on the Pine Ridge Indian Reservation. Since becoming Executive Director of Lakota Funds in 2010, Tawney has led this financial institution through several history-making accomplishments, including the charter of the Lakota Federal Credit Union, the first federally insured financial institution on the Pine Ridge Reservation since 1935, and the conversion of the Eagle Nest Housing, a low-income tax credit housing development, into privately owned homes. Juel is a branch manager for the Sioux Falls office of First Tribal Lending, a leading expert in tribal community lending specializing in the HUD's Section 184 Indian Home Loan Guarantee Program. Under Juel's supervision, First Tribal Lending's Sioux Falls office has successfully funded loans on and off reservation for site-built construction, manufactured homes, purchases on and off reservation, and refinancing for a multitude of purposes. Juel is an enrolled member of the Rosebud Sioux Tribe and has over 25 years experience serving Indian country through mortgage and banking sectors. Thank you, Tawney and Juel, for taking time to present as part of this webinar series. It means a lot to us and our membership. With that, I would like to turn it over to our first presenter, Tawney Brunsch.
Great. Thank you, Tyler, and welcome everybody. Thank you for the opportunity to participate in this series. So first of all, just a little bit of a background on Lakota Funds. Lakota Funds was the first Native CDFI. We are 34 years old this year, and so we have a lot of experience along the way, can provide a lot of best practices, I call it, basically things how not to do something. But along the way, we have figured some things out. It's taken all of 34 years, but very happy to be able to report on some of the successes here. So Lakota Funds' offices are actually located in Kyle, South Dakota, which is the geographic center of the Pine Ridge Reservation. We serve all of the Pine Ridge Reservation. We provide tribal members with access to business loan capital, technical assistance, asset development tools, like most CDFIs do. But in 2015, we also made a decision to expand our service area and include the Rosebud Reservation and a 50-mile radius beyond the Pine Ridge Reservation. So we do serve a large area. Our mission statement is just to do that, then, to promote economic sustainability on Pine Ridge and the geographic service area through business loans, technical assistance, and wealth building education for families and businesses. We could go to the next one, Tyler. And so just over 34 years, like I said, that's a long time. We've provided over 1,170 business loans, and we're over $15 million in loan capital deployed. 687 businesses started or expanded. One of the significant events, really, in addition to those businesses assisted in the jobs created or sustained, which I feel like is probably our highest priority, creating employment opportunities and creating that asset and business ownership so that our families have more economic opportunity to build more assets here on Pine Ridge and our service area. But in addition to that, I feel like, creating the Lakota Federal Credit Union and making sure that it was NCAI federally insured, which obviously provides some federal deposit insurance on deposits up to $250,000 for our tribal members to have access to all of the tools that they need then to help them build those assets through savings accounts, the checking accounts, all the convenience services and stuff with the consumer loans that, coupled with what Lakota Funds does, really provides the Pine Ridge Reservation and our tribal members here with access to every tool that they should need when they decide to take control of their finances and make an effort to build those assets. We also were the first Native American Low-Income Tax Credit Financed Project, or LIHTC project, at the Eagle Nest Housing. And I think those efforts started, the building and stuff, in 1988, 1999. And so it's been a long road there, but we finally have those units now, which are located near Wambelee, South Dakota, on the eastern edge of the Pine Ridge Reservation. But through that time frame then that we were able to get, were released from the LIHTC restrictions. And I'm happy to report that of those 30 units now, that we do have 11 of those homes sold. And so we have successfully converted that LIHTC project then from rental units to home ownership, or at least we're a third of the way along to achieving success. But it's just phenomenal, the change that we've been able to see in that community, moving from rental and just tenants, on a pretty revolving door type basis, lots of vacancies sometimes, but and now to see what the difference home ownership has made. In 2015, I think it was, we became the first Native CDFI to become a Farm Service Agency, offer the FSA guarantees on our ag loans. And so with that also came the opportunity to do more with that guarantee, which is the 80 to 90% guarantee on all of our ag production loans, livestock production mostly. Greatly improved the health of our portfolio. Our portfolio has doubled in 3 years, and it with much reduced risk. Our loan loss reserve is a third of what it was. And so those are good loans to be doing, and also created the opportunity for us to be doing more in Rosebud. So that was significant. We also have the child development accounts and match savings accounts, which all, help promote the asset, the goal of building assets. In 2008, we became VITA certified. We have VITA certified tax preparers, where we've returned over $8 million in refunds back to the community. And in 2013, also significant for Lakota Funds, we became part of the effort to remove the barriers to Native families achieving home ownership through through the South Dakota Native Homeownership Coalition. And we'll talk more about that on another couple slides. Tyler, if we could. And so just to outline kind of how Lakota Funds leverages partnerships. I mean, the first and most obvious one is Lakota Funds and Lakota Federal Credit Union. Us partnering together results in obviously more wealth building for families. Lakota Funds, very strategically then, Lakota Funds provides the business lending, our asset development through the match savings and the technical assistance and all the classes that we provide, but also I've got one certified credit coach on staff to provide that individual technical assistance, plus the products that Lakota Federal Credit Union offers with our savings accounts, our checking accounts, our CDs, debit cards, and all of the normal convenience services along with consumer loans. We will be adding, we've got 2 mortgage loan clients in the pipeline right now, and so we're happy to be diving into the mortgage lending as well. So we'll be offering that product as well. But, so we've got all of the products that Lakota Funds offers together with all of the consumer loan products that our tribal members, that our families here should be able to utilize and grow their assets more readily. And then Lakota Funds and Mazaska have partnered together for many years. I've been on Mazaska's board since 2008. Actually, I filled Elsie's spot, Elsie Meeks, so we've always had a presence in that relationship. But that has really been key for Lakota Funds being able to transition the Eagle Nest housing homes into home ownership, where we've had those homes for sale. Lakota Funds has certified homebuyer education teachers and certified in financial literacy to provide the one-on-one technical assistance for homebuyer readiness and financial literacy and homebuyer education. And then we are also able to utilize, the IDA's individual development accounts. Since AFI funding has gone away, the assets for independence aren't utilized as much, but we are able to secure, been very happy with some NeighborWorks support for us to offer smaller match savings accounts to help our homeowners, our Eagle Nest housing residents become homeowners. So we offer those, and then Mazaska provides the more detailed, more in the weeds of the mortgage loan, that kind of technical assistance. And then Colleen Steele and her staff are really masters at pulling together the down payment assistance, as much down payment assistance as they can find to make the mortgages approvable. And it really takes the flexibility that our Native CDFIs know and practice to meet the needs of our communities. So it is really only because of Mazaska's partnership with Lakota Funds that we've been able to move that many tenants into home ownership. Tyler, next slide, please. But there are many more opportunities for partnerships, and in the bigger realm then, when we go throughout the reservation, Lakota Funds has always been good, I think, at working with our tribal programs and tribal leadership, but we have a really good working relationship with the Housing Authority. Recently, the Housing Authority has made more of an effort here on Pine Ridge to do their conveyances, to move some of their rental units into home ownership. At that time, they need, a lot of times they'll look at doing home improvement loans um, once they become owners. So Lakota Funds has been helpful with that and providing homebuyer education and making sure they're utilizing all of the resources as far as subsidies and stuff go, and or just connecting them to other partners doing that, if it's Mazasca or whoever. Indian Health Services, we have a kind of a growing relationship with, and that we are assisting more veterans and helping the tribe prioritize, give our Native American veterans a little more preference here as far as home ownership goes and in just building assets in general. So a lot of times we'll make a call for a veteran to IHS to make sure that their water lines are connected when the home is ready. We've got some really backwards ways of doing things here on Pine Ridge, it turns out, but that's part of what we do, is maybe pointing out ways where we could improve that process. So there's lots of opportunity there. Our tribal leadership engagement, again, really good working relationship with tribal council and tribal leadership here. Opportunities to discuss Pine Ridge's needs for improved building codes that are specific to our tribe and to the types of soils and other things, to make sure that our families have safe homes and that our contractors know what to build to and our certified inspectors know what to inspect to. And then there's also always going to be opportunity. We're looking forward to encouraging a conversation with tribal leadership in Fannie Mae. Fannie Mae and Freddie Mac, for instance, who could provide lenders like Mazasca, like Lakota Federal Credit Union, and like Lakota Funds with access to increased mortgage loan capital. So we're happy to be the conduit, kind of the liaison between that discussion. Tyler, next. And then the South Dakota Native Home Ownership Coalition has really been huge and a big motivator behind a lot of the things that Lakota Funds is doing around home ownership. Happy to use kind of Lakota Funds and Eagle Nest Housing as the petri dish, if you will, of things of what works, what needs improvement, and then that oftentimes is the case in other tribal communities, and so it can be replicated or kind of learned from across the state. And so in 2013, Elsie Meeks was currently the state director for rural development, and she was frustrated. She was frustrated that there weren't more 502s, which is rural development's home ownership loan for tribal members on trust land. And so she was frustrating that that product wasn't being utilized more than it was. That really was kind of the motivation, and from there, she just did a good job of gathering all of the key players, and from there, then, almost 7 years later, we've got the mission there to collectively develop and implement innovative strategies and promote Native American home ownership. So that's really what it is just identifying those barriers of what Native families face in trying to achieve home ownership, whether it's land issues or lack of housing stock or not understanding what it takes to create a budget to save for a home for a down payment, for example. And so with that, in identifying those barriers, we really came up with working committees that address all of those issues. So we have physical issues, the coalition member and sustainability, homebuyer readiness, the veterans home ownership, and our policy. Very active working committees, all on a volunteer basis. Juel, I participate probably in 4 of those or so, and it's a lot of work. It takes a kind of we have a very dedicated base of stakeholders and support. Those are monthly meetings. So, but we did have some recent success. Just to give you an example, Tyler, on the next slide, of some work that I would say the policy committee led, but it was very, every South Dakota Native Homeownership Coalition member that was in DC or had any connections or had the opportunity to be in front of any of the legislators that could help us with this, was always, always took their turn and lifted this up for us. And so it was a success that was just a good demonstration of what a coalition can do. But we partnered with USDA with rural development and 2 native CDFIs. We used Mazatlan, Pine Ridge, and 4 bands serving Cheyenne River. And what they did is just instead of the 502 going directly to the homeowner, the loan being made to the individual homeowner, finally after 4 years or so, got rural development to agree to just loan the money to those CDFIs who already have the pipeline, more than what they can ever meet. Loan capital is always in high demand for these CDFIs. And in 2 months, Mazasca and 4 bands deployed 8 home loans, totaling nearly $1 million, which is more than rural development deployed in those communities in 9 years prior. So, that's the success of, first of all, the coalition working together, but also of our native CDFIs and how they have the ability to meet the needs of their community, and then partner that with a federal agency that's willing to take a chance and do something kind of out of the box. So the next step with that would obviously be making it permanent. And so, and we will be hitting that next. So, Tyler, what else?
Thank you, Tawney. We have a few questions on the line that we're going to go ahead and hold to the Q&A section. Up next, we will hear from Juel Burnette. Juel?
Thank you, Tyler. Good afternoon, everybody, and thanks for joining. As Tyler said, I'm with First Tribal Lending, and we are just a mortgage company that focuses on lending in Indian country across the nation using the HUD 184 program. I don't want to take for granted what people do know and don't know about the program, so I'm going to talk, about some basics here, a little bit about the 184 and some other opportunities that we have. But HUD 184 was originally designed to bring capital to Indian country back in the early 90s. I believe it was 92 when they created the program. It's obviously a lender choice if they want to offer the program, and I've been around it for quite some time. I don't want to date myself. But it was originally designed just to use on the reservations, but they found that it wasn't gaining the roots that they were expecting it to, so a lot of tribes petitioned HUD to open it up, and we've got 25 states, I think, that are opened up nationwide to use the program on or off the reservation. And honestly, my focus from day one has always been in the trust land lending, so I want my people to have an opportunity to live on their homeland. So that's still my focus today, and some of the characteristics that make it that made it a little more attractive than your other opportunities, if they did exist, was the lower down payment at 2.25%. When the program first was created, it didn't have a PMI, a private mortgage insurance piece to it. I believe they implemented that back in 2014. But it's still a lower down payment and lower PMI rate than your conventional and FHA products that are out there today. So it's still attractive from the upfront piece with lower down payment and lower cost by the month. Tyler mentioned some of the options in my bio, but it does have a construction option to it, which is fairly unique. Rural Development had come out with a construction option to one of their programs, I believe, here just in the last year or two. But 184 has always had a construction component to it. It's a single close construction where it's the permanent financing and the construction financing all in one ball of wax. So that you go in and sign your loan papers, your house gets built, you do not have to re-qualify and go back in and sign more loan papers. It's all done upfront, one-time close, done deal. So the types of homes that can be financed under 184, we pretty much can do everything. I haven't come across a type of home yet that a borrower has presented to us that we couldn't finance as far as the type of home. But Tyler mentioned modular manufactured homes, stick built from ground up, purchase of existing with some remodel, just rehab loans in general. If the wife doesn't like her kitchen anymore, that can be redone with a refinance and remodel. So, and we can do cash out refinances to pay for college or unexpected medical bills, anything like that. So it's always been a great program. One of the biggest secrets that I come across a lot more than it should, and that's why, education is a big thing, but entities can be the borrower. A lot of our leaders don't know that the tribe or the housing authority or branch of the tribe can be a borrower under this program to build development, on their reservation. So, in the first bullet point there, right now the program's running, it's always kind of a toss-up, but I think it's around 11, 12% of the entire portfolio for the 184 program is only done on trust land. So with my last comment, obviously we'd like to see a lot more trust land transactions, and I think we drive that with the entity piece. And I've been involved in several projects across the board, small ones, onesie twosie type deals, and as big as 317 at one time. So you can do pretty much anything in between there. Back before 2008, when the mortgage debacle happened and the meltdown and the whole bit, Fannie Mae was a major player in trying to provide more opportunity other than the 184 program on the reservations, and that's really making a comeback. It's good to see Fannie Mae. We're working with Fannie Mae right now on their conventional lending opportunity. This is going to be a very direct approach between Fannie Mae, your tribe, and the lender or lenders that want to participate in the lending agreements. This is a chance for the tribes to really sit down with Fannie Mae and the lender to come to an understanding, especially around the foreclosure and eviction piece. That kind of language can be spelled out in these agreements, how we're going to handle those going forward, because if anybody on the call has experienced some of that through the 184 process, we all know that it is not a very friendly and smooth process. So, but bottom line is, if we can avoid that and stay away from foreclosures, I think everybody's in favor of that, and that comes with the education piece here. We'll talk a little bit more about. But with this conventional lending opportunity, it won't be 184 loans. It's going to be your standard. There's no, basically guarantee behind these loans. Fannie Mae is looking at, they will offer pretty much their full product line, but they're also very open to creating more products that, may compete even better with, per se, the 184 program. And they are also talking about a single close piece. So that's nice to have other options for our Native people and our tribes that are trying to do stuff within Indian country. So another special bullet point around this is obviously 184 has its limits as far as what we can do for max mortgage limits per county and per state. This conventional lending opportunity really opens the door to some of our wealthier borrowers, if you will, and sometimes those max loan limits don't allow our borrowers to get as much house as that they need or that they can afford. So in some of our high cost areas, a house that's $490,000 just isn't possible using the 184 loan program, so we can switch it to a conventional product and get that done for our tribal members. Next bullet point around down payment assistance. This is a major issue across the board. Tawney covered, some nice options that, she's working with some of her referral partners. I've seen this issue addressed in several different ways, but not all of our borrowers have the opportunity to tap into some of these places. One of the biggest things is the NAHASDA program allows the entity to use some of those funds to create a down payment program if the entity wishes to. So I always ask the tribal housing boards, I said, what's it cost you to build one house here? And for example, if it's $150,000, well, if they take $150,000 and set that aside and gift that out in increments of say $5,000, they can help that many more people at $5,000 a crack versus building one house. So the economics kind of makes sense, and there's some tribes that have done that. They've also, We've also seen some tribes that did gaming matches. If you're a gaming tribe, if the housing entity says we're going to put up 100,000, the gaming the tribal council will match it with 100,000 from gaming proceeds. With those gaming proceeds, obviously there's no income attachments typically, so that really helps some of our higher income borrowers also. Heard some statistics nationally here just in this last year that, you know, a majority of the U.S. population doesn't have $2,300 in their savings account. I mean, that's across the board. That's pretty significant, but I'd like to, you know, drill that down into Indian country. You know, what's the average savings account throughout Indian country? And I would guess that it might be even less. And then even talking about, okay, what's the percentage across the U.S. that has actually a 401k in place? And I think the staggering statistic on that was around 70%. So 70% that don't, you know, have a 401k. So down payment assistance, saving for money, it's a big deal because we tell all our borrowers when we're using 184s, you should have at least 6% saved to what you're trying to spend on a house. That's a pretty tough pull for some of our borrowers. So working with some other programs, we can do lender paid closing costs. Seller can actually pay up to 6% of the closing costs, which we've never seen a deal where they're 6%. So 184 is very lenient with that seller paid closing cost. We've seen some state down payment programs being used. We've worked with Federal Home Loan Bank through a sponsorship with Dakota Bank here in South Dakota. So there's a lot of opportunity, I think, to just kind of look around and see what's available out there, and we help where we can in those situations with the down payment program. But and as far as education goes, education is really our number one hurdle across the board. Tawney's heard me say this a million times, if not a million and one, but the more educated our borrowers are, the better the transaction is going to be. We tell our borrowers there's absolutely not a stupid question when you get into this process. We ask because we can't read minds. We gotta know what you're thinking. But most people that into this homeownership piece, I mean, it's a tough deal. We don't make it sound like it's easy by any means. We tell them that we're gonna, you know, drag them through the coals, you know, when they start this process, and we're gonna have to document everything. But education and partnerships will lead into the next slide. But the last thing I want to talk about in regards to education here is the American Indian College Fund, something that First Tribal and the loan officers here at First Tribal are pretty proud of, is that we fund $60,000 annually at a minimum to 15 scholarships that American Indian College Fund handles for us. First Tribal doesn't have any say in who the recipient is of those 15 scholarships. But to build that up, for every loan that our loan officers close, they contribute $50 out of their own paycheck towards that scholarship fund, and the company matches. So there's $100 for every loan that First Tribal closes going into that scholarship fund. We're exceeding $60,000 annually, but we're letting that build up, and pretty soon we're probably going to increase that scholarship amount. But I wanted to mention that because I think it falls into the education piece, because we're trying to get more of our Native kids, you know, through school, through college, and what have you. I think the graduation rates out there have maybe increased a little bit, but they're still, you know, lower than average. Next slide, please, Tyler. So partnerships, you know, and partnering with our tribes and tribally designated housing entities. These entities, along with any other entities under the realm at the tribal level, are our number one referral sources across the country, with no doubt. And there's no doubt that within these entities, when we have these relationships, you can see by looking at, if you were to break down our volume across the board, you would see that the places we're closing more loans than other places, they have these people set up, like Tawney talked about with Mazaska, you know, being their boots on the ground, helping their tribal members through the process. Those kind of relationships that we have at the tribal level on the ground are the places that we see the most success at. We have one tribal relationship. I think it's 4 or 5 loan officers, one on each of the reservations, and they hold the hand of the tribal member all the way through this process. And they're on the phone constantly every week with one of my loan officers, asking questions, making sure they're taking the right steps with that borrower. So those those relationships with those tribal entities, whether it be the housing department or department of the tribe, or if it's the CDFI, native CDFI, no matter what it is, it's been a positive impact and a positive experience, not only for us, the lender, that may not know how to navigate, and we need that local entity to tell us who the contact people there at the local levels to get the documents we need executed for our tribal members. But I travel across the nation, meeting with tribes, tribal housing authorities, the entities, and a lot of them put on homebuyer classes and homebuyer fairs. Just to mention a couple that do a really good job with homebuyer fairs and homebuyer classes. You have Cheyenne River. Cheyenne River puts a class on that's, done very well. We travel up there, and it's a 5-6 hour drive for us. Eastern Cherokee out in North Carolina, they put on one heck of a homebuyers fair every year in June. They have vendors from all over the community that come to that. Walmart's there, their local hardware stores there, everything around home ownership and that kind of stuff. They invite those people and those businesses to the community. Nez Perce Housing Authority does a great job with their home buyer fair. So if that opportunity is there and you want to create that at ground level within your community, just keep me posted on that. We're glad to participate in things like that and develop those partnerships and those relationships through those kinds of functions. Again, manufactured home dealerships. This is kind of, it could be a bad subject on your reservation, and sometimes, manufactured homes, I hope the reputation is kind of going away, but it was something a lot of our tribes and tribal members, didn't like to deal with because, it wasn't very good business. But the manufactured home dealership business today with modular and manufactured homes is huge within Indian country. And I think it depends on, the dealership and the person building the house, the entity building the house, the quality of home. I think you got to be careful of who you're doing business with. And just for example, the 2A list here, Centennial Homes and Eisman Homes, they're a regional dealership here in South Dakota, Minnesota, North Dakota. I think they're in 5 states. They work very well with us compared to some of the other dealerships. Custom Touch Homes is another, but they're a specialty home type builder. So just be careful of who is actually building that home for you. And I know Ho Chunk got a Winnebago, Nebraska down here. They're 100% owner, I believe, in their dealership that they own out of Wisconsin. They build a great home. But it's those relationships and those dealership relationships that we have created also across the board. We work together. It's kind of an understanding because we can't pay them 100% of the funds up front at closing time. So there's kind of a give and take through the process with the particular loan program that you're using.
Thank you very much. It looks like we're having some technical difficulties, so we will move briefly to a Q&A question. This first one is for Tawney. Do you have any thoughts about the future of low-income housing tax credits in Indian country? Should we try to grow the number of LIHTC projects? And have you seen success in low-income housing tax credits rent-to-own turnover?
So I only have experience with ours, basically, but I know there were many challenges. One of the things that we had to do that I understand they're doing differently now is to approach the tribe, and they required that the property be taken out of trust and converted back to fee simple. And so, in my mind, I don't like the fact that it dilutes, our tribal sovereignty. I mean, the tribes get their power around their land base, right? So you should be very hesitant to release any land out of trust. And so that was one challenge, but I understand that has been corrected. It's also a burden now to my homeowners, even though the property taxes in Jackson County are very low. I think my homeowners pay less than $700 a year in property taxes is still something to consider. I would be very much opposed to taking land out of trust for those projects. So hopefully that is figured out. Of course, there has to be I hope there's an opportunity for it because there's such a need in our Native communities for housing and especially in housing that can result in home ownership. And so I'm like I said, I don't have any more experience outside of Eagle Nest housing, but I hope they have made some improvements to get it more figured out.
Thank you, Tawney. So today we heard from practitioners. Both public programs and private capital need on-the-ground implementation to work in Indian country. It's important to note that basic financial services and lending are both important. Native CDFIs are critical organizations that directly serve these Native communities. Appropriations for programs are much needed, but implementation is key. Affordability for housing is a good thing, but we need lenders and buyers who can avoid predatory loans and ensure quality implementation. Tribal economies are important, and we should not be shy about the impact tribal economic development has on surrounding communities and regions. Tawney, another one for you. During your presentation, you mentioned the timing in working with Indian Health Services to have water turned on. Can you speak a little bit on any other timing with federal stakeholders? How can practitioners line up the dominoes to fall in sync?
Yeah, so on Pine Ridge, and I understand that this is different for every reservation. Is what I learned is that they do it differently in Cheyenne River, even. But on Pine Ridge, the home actually has to be in place, has to be finished before IHS will allow the water line to be installed. Which makes no sense to me because from our experience in the construction cost of that, it's about $15,000. Our tribal member, the homeowner is not going to have that, so that needs to be included in the financing of the whether you're starting with a construction loan or whatever. And so it's just Pine Ridge. It's something that's Pine Ridge, and that's something we're working with tribal leadership to correct. And I understand where IHS was coming from, right, is that they probably were investing a lot of time and dollars into installing water lines, for homes that never happened, where the financing was never approved. But all I can do is suggest, solutions that might benefit both parties. If there needs to be a little bit of a down payment towards that water line install, and or if I just could cut their costs by potentially allowing the contractor that's on site doing the construction, doing the basement, the foundation, whatever it is, it would cut some of their costs that way. And so I guess as a practitioner, I can see the easy ways to address that, and just suggest it, and then just work. You kind of have to keep on it or whatever. But yeah, that's one example of a delay. Juel might have more around other federal agencies that cause delays. I guess the biggest one that I can think of too around the trust land situation is, and it's one that is improving, and it actually is pretty dang good here on Pine Ridge, is the process to secure a leasehold mortgage on trust land. And that process has just been pretty complicated in the past and has to pass through lots of hands. Even getting the certified title status report, for example, which is how our tribal members show ownership of tracts of land, of trust land. Even that process has been very slow in the past, sometimes up to 6 months. And then from there, verifying the ownership, getting the leasehold mortgage approval process figured out, and then signed off on at the local level and at the regional office. Just, it's like anything, the more hands it has to pass through, the longer it's going to take. But I will say, I'm going to say it's a lot because of the coalition's efforts and people like Juel Burnette who can, make recommendations for approval, and our own, the practitioners' experience with it in recommending ways to improve it. I feel like we're going to be getting some traction on that one as well. I believe it's Senator Thune's office and Rounds actually have been very helpful with us kind of moving some language forward.
Thank you. This next question is for Juel. What's the best way to maintain a good and effective relationship with the BIA?
Hello, everybody. I apologize. I have no idea what happened and how it got kicked off, but I'm back. And I was kind of talking about the BIA a little bit. I don't know how much you heard on my last slide there, but I was, motoring along talking about the BIA and, our relationships with them. So I sure apologize. I kind of have a feeling it was on my end with our phone system here, but I can't be sure. So yeah, good effective relationships with the BIA. I think it's pretty simple. I like to treat people like I like to be treated myself. So, being nice and talking through the issue and offering what you've gone through maybe in other agencies and what have you. I found a lot of success with having good conversations with a new agency per se that, we haven't done a leasehold mortgage on before. And they really appreciated that. We've given them a contact information back at whatever other agency works well in their state or what have you. And some of these BIA people, there's been a lot of turnover in the last few years here. So we're re-educating, we're rebuilding new relationships. So it's a constant every day with the BIA. Fortunately, here at First Tribal, we have a couple people that are doing a lot of follow-up on the post-closing piece. And some of you might have heard of Dark Feather Anchetta, but she actually walks through the doors more than I do at the BIA levels. She'll actually go and chase our documents down and meet with the BIA people in person. So a lot of the BIA staff across the board kind of know who Dark Feather and I from either in person or visiting over the phone, and the relationships we built over the last 25 plus years. So again, I don't have the staff people at the levels. They're just trying to do their job. And where I ended before I got cut off was we have a couple sore spots in the country, but it all revolves around basically them having limited staff. Kudos to J.W. Smith and Randy Tricky out in Nashville. They're two guys, but I think they just recently got staffed up. So I'm looking forward to seeing the Nashville office really improving on their turn times with the tribes that they serve in their region out there. But that's just an example. I mean, JW and Randy have always been helpful. They're just two guys, and they just couldn't get it done, in time that we wanted or needed, because they're just two guys. So that's to be expected with anything you do out there. If you don't have the staff to take care of it, it's pretty tough to provide the good customer service back.
Thank you. I believe this next one will be for you. However, Tawney, feel free to reply as well. So we have a question on the line. In regards to one-time close construction, the investor that was being used for this individual told them that they could not deliver the loan until the home is complete. Is there any way to know who these loans are being sold to?
At First Tribal, all of our 184 loans go to Ginnie Mae. So each lender, and I'm not, this isn't really my wheelhouse, but from what I've learned over the years, each lender has different agreements with their secondary market investor and what the requirements are and what the secondary market has for a punch list for them. I've heard that in the past from other lenders that they can't deliver that loan until the home is complete. I don't know. It sounds like they may not be delivering that to Ginnie Mae, because I don't think that's a Ginnie Mae requirement. So I think it's just the agreement that's between the lender and the secondary market investor, because we can deliver that loan, before, we're selling them right away. We're pulling them off and selling them here at First Tribal in the Ginnie Mae pools.
Thank you. That sounds like a question we may need to follow up with the participant who's asking. So we heard a little bit about the 502 relending pilot program at USDA. The 502 pilot is a fantastic demonstration with incredible opportunity for Indian country. We should work together to expand this program and build on its successes. Similarly, the HUD Section 184 program can't work if we don't have lenders willing to make it work. While fee land housing is important, this program should not be bypassing trust land. The South Dakota Native Homeownership Coalition does great work that benefits all of Indian country. We should stand together, including federal stakeholders such as the BIA and HUD, to address common challenges and find the best policy solutions. This means you all participating in this webinar right now. We need practitioners to partner with federal agencies and tribal organizations to make sure these dollars reach their intended destination. Private capital also requires implementation. We need people like Juel to make sure that private mortgage markets reach tribal communities. We should want conventional lending to be available in Indian country. Leveraging the HASDA money with private and public funds is also important. CDFIs and private lenders have a critical role to play in building tribal sovereignty. Sovereignty means effective institutions, both public and private. Housing programs can be used to help build tribal services and legal systems in your communities. This question is for Tawney. What was key to making the South Dakota Native Homeownership Coalition successful as an advocacy group?
I think there are a couple of reasons that it's been successful. First of all, is just getting the right people in the room. And that, like I said, was pretty much led by Elsie, knowing everybody. But, you know, first tribal lending was there. We had the tribal housing authorities, the TDAGs, all of the native CDFIs and the other CDFIs serving native populations. We had the federal agencies. Federal Home Loan Bank was there from the beginning. Rural Development participated actively from the beginning. South Dakota Housing Development Authority. And so just kind of the broad base of support that we had coming together, you know, on a statewide initiative to remove the barriers. But the second thing that we did was really, I think we did a market survey. Well, we hired 7 sisters. I just got to give a shout out to Leslie Newman and Joanna Donahoe, who have been really committed through 7 Sisters support and everything the coalition does. So hired them, and then I think we started with a little bit of a survey, just to survey those stakeholders that were in the room, even prior to us gathering, to have us, you know, tell them what we saw as the barriers. And so we did a good job of identifying the barriers, and then have just worked tirelessly really to be very strategic about how to address them within those five working committees.
Thank you. To either of your knowledge, has anyone approached FNMA to allow a certified native CDFI to be treated similar to a state HFA, allowing their conventional HFA preferred loans to meet borrowers/loan amounts exceeding Section 184 program guidelines to take advantage of the 3% down discounted and cancelable mortgage insurance?
I can take that one, Tawney. Yep. I did mention that in my first slide. I think Fannie Mae right now, as I stated, I believe they're going to offer every product they have in their product line to date, and they've also been very open to product creation of new products. So I definitely know that's there. It's just a matter of, again, we're going to get very direct one-on-one between, you know, if you reach out to Fannie Mae, Kelly Coffey's the point of contact there, can circle around and give that information to Tyler so he can hand that out, or you know, obviously you can reach out to me anytime, but start the conversations with Fannie Mae and Kelly Coffey there. I will say that Freddie Mac is also looking at entering into the product world, and this is all coming through duty to serve piece, which is good. I think the more options we have for our Native people across the board, especially on reservation, the better off it's going to be for everybody. So more products is always a good thing, and I'm hoping to see something that rivals or maybe even is better than the 184 program. And I did have Sharon Vogel from the Cheyenne River Housing Authority challenge me, and I will never forget that. And I brought it up to Kelly that, you know, we believe that there's a product out there that's needed for used manufactured housing. I think there's some good product being sold that's traded in that our people can take advantage of, because as we all know, there's many different affordability levels out there, and some of those used manufactured homes are in very good shape and can be resold. But right now, there isn't a product out there that can finance and be sold on a secondary market when it's a used manufactured home. So I'm looking forward to more conversation with Sharon and Kelly around, something of that conversation with product development.
And I will say that with Lakota Funds and Lakota Federal Credit Union have been, actively engaged with conversations with Kelly Coffey at Fannie Mae and just under their duty to serve, but mostly they're just very interested then, since Lakota Federal Credit Union is a NCUA, a federally insured credit union, but they're also a CDFI, a certified CDFI, so that in some ways that's best of both worlds. And so I've been in conversation with Kelly for the last year or more because we knew that we were going to be rolling out this mortgage product, and it was a great opportunity then to be making sure that whatever our home mortgage products look like, that they were conforming from the very beginning. And so that's pretty easy to do because you're restricted by the NCUA anyway. The challenge will be, how do we offer that kind of product and still meet the needs of our community? But I feel like with Lakota Federal Credit Union, we're really set up once we get that experience under our belt, which I think, they're even a little bit flexible on that part. Once we get a little bit of a history in offering these mortgage loans, I think we'll be in good position to kind of test the waters there and see what we can get done with Fannie Mae, because obviously that secondary market is super important. The credit union is in better position than a lot of the CDFIs as far as loan capital available to lend. The fact that the credit union is also a low-income designated credit union sets us up to be in a better position to encourage more deposits with that insurance from anyone. Even if you're not a member, you don't qualify for membership, we can accept your deposit. So we're just set up. It's just that it's, like I said, it's a little bit of a challenge to come up with a product that will meet the needs of this community and still protect the credit union. And so we're very anxious to roll it out and see what we can do.
Thank you. This next question is for Juel. Conventional lenders like Wells Fargo have retreated from the HUD Section 184 program, and many lenders perceive Indian country as too risky to do business. How do we encourage and sustain more private lending in Indian country?
As I dial back in, I think Tawney made a couple comments surrounding it, and I think a lot of this with some of the retreat from most of the lenders has to deal with the turn time, not only at the front end, but more so at the back end, because recently, just last year, the secondary market requires that we have to have a fully guaranteed loan inside of 12 months. If we don't, we got to repurchase that loan out of that pool to make that pool whole. So now obviously there's some expense to that. So we don't want to lenders don't want to get in the habit of having to pull loans out of pools that they've sold off for a couple different reasons. Number one, it's expensive. And number two, the chances of getting that, so that once that loan gets guaranteed, finding another pool at whatever percent that loan was sold off at might be difficult. So if we were in a great market environment and the rate on it was 3.25 and rates jumped up to 5% and they don't come back down to 3.25 for another 6 years, we've got to hold that loan for that entire 6 years and can't resell it. So I think that is probably the crux of why a lot of lenders exited. And Tawney mentioned we are working on some language with our some congressmen from both sides of the aisle, which we appreciate. There's a lot of work being done, learning a lot from that side of the business also on what it takes. So hopefully there's going to be some language that holds the BIA accountable for one, and two, right now there's, for lack of better terms, there's a Band-Aid fix with an indemnification agreement that's, being talked about that we can indemnify the loan, get our guarantee, and be within that 12 months, so we don't have to worry about repurchasing that loan. So the development of the language, and I think the people that are helping us, you know, at the congressional level are just about as tired as Indian country is about hearing the same old stuff, the same old story, because it has been for as long as I've been in this business. It's been the same old story, the same old problems, and we kind of know where it starts at and how it ends, and we can track these things and make it better. We just need some teeth behind it legislatively to hold people accountable in timeframes that we need our documents back once we do close our loans. So the post-closing side of it, once you close your mortgage, I think that's, you know, the culprit behind a lot of the lenders leaving the market when it comes to trust land lending.
Tawney, I'd like to pose the same question to you. How do we encourage and sustain more lending in Indian country?
Well, in my mind, the answer is easy, and it's prejudice, of course, but we need to just get more investment in our native CDFIs, right? I mean, that 502 relending kind of proved that. The native CDFIs know how to serve the needs of their community. They have a pipeline. I mean, you know what I mean? Mazasca, any given time, will have, you know, a pipeline ready of about 30 borrowers, you know, that are very close to being ready to have their loan underwritten and stuff. And so it's just, you've got the pipeline of families that are ready. You know how to work with the local offices. I don't know anybody better than Mazasca and her team and Colleen's team at being able to communicate with OST and the BIA offices and stuff. They have a very good working relationship. That's why their turnover time for all this TSR and the mortgage process is, you know, a fraction of what everybody else's is, usually completed within weeks instead of months. So we know the processes, and like I said, we know the, you know, how to get the loan to a state where it's approvable with whatever subsidies we have access to. Working with the families. What we lack mostly is maybe a little bit in staff capacity, because there's a lot of needs to be met here, but it's mostly in loan capital. We need the loan capital available to relend. If I don't have to stop lending to fundraise, you know, to reach out to my investors, and I'm lucky that Lakota Funds has a pool of investors, which was developed probably 15 years ago, you know, where we pay out anywhere from 0% and up to 3% for, you know, investments anywhere from 2 to 5 years. And so we have that, but it's still, when I have to stop lending, which I have had to do before to raise more loan capital, that's not okay. And if we had a steady stream of investment in the form of loan capital, I think it would really change what we can do.
Juel, this next one's for you. So will your organization be processing a conventional loan option for home buyers? And if so, when do you expect for that option to be offered?
Answer is yes, and we're just working through the details between First Tribal and Fannie Mae. We've had a couple conversations, and we need to swing back around with the questions that Fannie Mae has asked us as a lender. So we're continuing those talks with Fannie Mae and hope to be, I would like to be up and running sometime by middle of this year at the latest, if not sooner. So there's some ramp up time once the agreement obviously gets in place. I think Fannie Mae does have, you know, a handful of tribes that have already executed their side. They're just needing a lender. There's some ramp up time on our end, obviously, because our underwriters, we have 5 underwriters here at First Tribal, but we've got to get them coached up, you know, to learn the programs that we're going to be looking at, you know, that we think are the most beneficial, and take it from there.
Thank you. This next one's for Tawney. Housing is a health issue. There's no question about that. What more could be done at IHS to promote housing in Indian country?
Um, I guess I don't know at IHS. Let me see. I mean, well, we do have, I mean, we have homes here that are being lived in, you know, without adequate water supply and stuff. There's all sorts of things that IHS needs to do better, honestly. I mean, I appreciate that they're, you know, overburdened and all of this stuff and a wide range of things that they're responsible for, but maybe it would just start by being more receptive, I guess, to conversation with community members and maybe reach out to them to see what could be improved. So we don't have examples of homes that were built and are sitting there now and maybe even vacant and deteriorating because we don't have water to them. Would be one thing, just the one example, but maybe open it up to community, you know, discussions so you can get a better feel and then be receptive to make those changes. And I don't know how many of those can be done at a local level, you know, if it's just on Pine Ridge, some of them, or at that at the more the higher level. So yeah, I'd say just listen and be willing to change.
Thank you. This next one's for Juel, and you may have been back on the line. You may have still been off the line. I asked Tawney about working with IHS with respect to timing on things like having the water turned on. Juel, can you speak on any other timing with federal stakeholders and essentially how we can line up the dominoes to fall in sync and fall at the right time?
That's always the challenge from start to finish with, you know, IHS, the builders, the subcontractors, you name it. It's you know, that's why having a good general contractor, I guess, is worth their weight in gold if we're doing that. But in regard to my comments around IHS, you know, obviously a big fix is funding. They can always use more funding, and I heard Tawney mention here when I got back on that Pine Ridge won't allow, the IHS won't do any work until that house has arrived on the site. And that's the case across the board. As soon as IHS sees a foundation in, we've had a lot of luck with get them to provide their services. But I go back to the old Minneapolis line, you know, that is throughout South Dakota here. You may have been next on the service list today, but all of a sudden something happened at the tribal level and that contractor got redirected to go to the other side of the reservation. And we see that a lot. And I think a lot of our housing professionals probably see that within their waiting lists for people who are on the list for just houses. But I think if they just stick to their guns and stick to their work orders, you know, in the order in which they have received them, I understand that, you know, even from where I'm from on Rosebud, you know, if they're on one side of the reservation, they should try and get everything done on that side of the reservation that they can, because it takes a lot to mobilize that equipment that they need to get, you know, those services provided. But, you know, the funding piece is big. We haven't had a horror story lately here, but we've had some horror stories in the past of, you know, IHS will always cover themselves with providing the service letter saying, when and if funds are available, you know, we will service the home site for Juel Burnette, you know, which is fine. You know, it's an approval letter. But the other thing that we've recently run into here lately too is a budget letter from IHS. We need that in the 184 world, because if for some reason they're budgeting $15,000 for my water line connection and my septic system, and for some reason that goes over the $15,000, who's going to pay for that? In the single closed construction loan piece that I mentioned, we're closing that loan up front off the bids and dollar amounts that we have at time of closing. So there's not a lot of wiggle room for cost overruns in a case where a well has collapsed or it's going to be more expensive to put the water line in because they mismeasured how far it is from the main or what have you. So it's very important that we get the budget letter from IHS and it's reasonable. And we've had some pushback from IHS in some areas, but once we've had those conversations, we typically get what we need. But we've had some cases where people have had an issue with the work, and it's exceeded the dollar amount of the bid, and our borrowers have struggled because we got to cure that. So IHS needs to be careful in that aspect of it too, and not to underbid the project for the services that they're saying they're going to provide.
I'm just wondering if we might approach it from an underwriting perspective too, Juel, which I could see as being burdensome to some of our homeowners or home buyers, but to add a larger, like a contingency, just to allow, the chance then that IHS runs out of money or it takes too long or whatever, that you're always just figuring in another $20,000 or whatever it's going to cost for water in that way. And I think, that might be good in some ways to know that you're going to get it approved at a level where you can get it done no matter what. But in some ways, I know it would be a challenge for our families to qualify then, because a lot of times the cost of even a very modest home, with the remoteness of Pine Ridge and stuff, and the distance that the homes have to travel, and or the cost of construction, all of that is higher. So it would be probably then a challenge to even qualify them with that much of a contingency built in.
Right, qualifying for it. And we've had some of our borrowers that actually just chose not to wait for IHS, and they've gotten their own bid for water and sewer services and included it in the loan. And that's fine, they can do that, but it's hurtful to me to know that, if they would have waited, they could have got it paid for. But some people just don't want to wait. They want it done. They want to move on.
Maybe we need to push for IHS to reimburse.
I hope.
There's
just in the dream world.
Right.
Maybe we have someone from IHS on the webinar.
Right. Yay.
So manufactured homes often come with high interest loans, and installation can be tricky. What can tribal nations and organizations that serve tribal communities do to better equip home buyers to navigate the manufactured housing process?
And
I'm just going to jump in, Joel, and go ahead.
Yep. Nope, you go first, Tawney.
Well, it might even be the same. Your standard answer is education. To start with, it just feels like you can't be prepared in this without knowing everything about a manufactured home. So know the difference. Know what you should be looking for. Know the questions you should be asking more than it's just pretty on the lot and it's the size that you need. And or if you're buying used, of course you have less options than that. But be informed. Not only of the product and the cost involved, that then translates to with the quality product that you're getting, but also the energy efficiency of the choices you make, and windows and siding and roofing and the finishes even. I think that, and then we really need to be careful to inform our Native families of the comparing their options around the mortgage loans available to purchase that. It doesn't have to be through Eisman. It doesn't have to be through the manufactured home dealership.
Right.
They'd be happy to do that for you. But the more informed we are from the very beginning, kind of front load it, the better decisions we're going to make.
Yeah. And I agree, the education piece is important, but also I think our people need to practice some patience. That's where we lose. That's where we lose quite a few people. Everybody's been waiting, like we talk about the waiting list at all of our tribes. Those waiting lists vary from tribe to tribe. They've been on that waiting list. They're just tired of waiting. They go to the dealership. The dealership can get them into a house, get them approved. It might be at 18%, but they're getting the house done and down the road to them and set up. Getting that house on a permanent foundation comes back to the education piece, making sure you're putting it on a permanent foundation so a lender can come in and help you pay that off and refinance that and get you into a better deal than what you got yourself into initially. And we see a lot of that, and glad to help in those situations. But that's where we've seen where patience has been lost, and they just want the house today. And that's why manufactured modular housing is so big in Indian country, because it can be done quicker and less expensive than a site-built home in a lot of cases. So the patience piece is huge. And like I said, some of the dealerships really take advantage of everybody. not just Indian people, but everybody they sell a home to. I've heard the horror stories. They can get you financed, but it's going to cost you. And, you know, seeing that principal balance, you know, go down is going to be very slow when you're comparing a rate to what, you know, we can offer at, you know, today's market rate versus, you know, the 14 to 21% interest rate that we've seen on some of these deals out there. So just be well educated, like Tawney says, and practice some patience, and, you know, work with a lender that, you know, wants to help you and get the deal done, and listen, you know, follow directions, and they'll get you through it.
Thank you. Our last question on the line is actually a comment. Thanking you all very much for your voices, examples, and inspiration. So on behalf of our attendees' question and comment, thank you very much for your time. So I'd like to switch gears very quickly. Please don't forget to register for part 4 of the webinar series, Making Homeownership Affordable, which will take place on Thursday, January 30th. Same time, same place, different day. I would also like to mention a notice of proposed rulemaking comment deadline for regulations modernizing the Community Reinvestment Act. On January 9th, the Office of the Comptroller of the Currency and the Federal Insurance Deposit Corporation released a notice of proposed rulemaking seeking to modernize the Community Reinvestment Act regulatory framework. The Community Reinvestment Act was designed in part to incentivize increased access to capital and credit for tribal governments, communities, and citizens. The comment deadline is March 9th, 2020. Sorry, shuffling through some materials for the deadlines here. And NCAI supports the proposed final rule, and it will greatly incentivize increased access to capital and credit in Indian country, particularly for homeownership and new home construction. NCAI will soon circulate a template comment letter that tribal nations and organizations can customize and submit as a part of this rulemaking. Should you have any interest in this rulemaking or submitting a comment, please feel free to reach out. Copies of the Tribal Leaders Handbook on Homeownership can be downloaded for free from CICD's website at the address on your screen. As previously mentioned, this webinar will be posted on NCAI's YouTube channel. Once the webinar is posted, an email will be sent to all webinar registrants that will include links to directly download the handbook from CICD's website, as well as other resource materials. Additionally, past and future information regarding this 4-part webinar series will be provided for your ease of use. We look forward to you continuing to join us next week, and please don't hesitate to reach out with any questions or comments that you may have. Thank you.